Are you ready to learn some exciting things about Tesla? Get ready to be amazed as we look at Tasha Keeney's newest in-depth analysis. If you buy in Tesla, Tasha has some shocking news that could double your money. She also knows about the latest news from Elon Musk and the company. Tasha knows everything you need to know about Tesla, from the growth of its insurance business to the possibility of a new $25,000 Tesla. By the end of 2023, Tesla's insurance plans will cover more than 45 states. Now is a great time to invest in the company. Also, who knows, maybe Elon has something fun planned for us. Hit the like button, then prepare to be amazed by Tasha's valuable thoughts and analysis. Don't forget that dollar cost averaging into Tesla is Tasha's best way to invest. Come with her and let's see what comes next. Tasha made some recent public statements. Again, I think the longer term story is that electric vehicles are here to stay, and I'd be very concerned if I were Ford or one of the other traditional auto manufacturers, since the majority of their installed base and the vehicles they sell are gas-powered cars. Now, let's talk about two big events that could make Tesla stock double right now. But first, I want to talk about some new information about Tesla that could have an effect on the company next week. Tesla's most recent earnings call showed that demand is higher than ever and production is twice as fast as supply. However, Texas will not start making Cybertrucks in large numbers until 2024. There is a huge chance that Tesla will deliver up to 2 million cars in 2023. This brings me to my first trigger for 2023. Tesla's insurance business is growing at a rate of 20% every 3 months. This new car could be the $25,000 Tesla we've all been waiting for. Let me know in the comments if you think Elon has something else in store for us, or if you think we'll see a cheaper Tesla on March 1st. People often miss Tesla insurance and don't realize how important it is, which is why I brought it up. Listen up though. Tesla insurance is already available in a few states, and it will be available in 45 states by the end of 2023. People who know Warren Buffett well know that he built his fortune in the insurance business many years ago. The US auto insurance market is worth about $300 billion right now. Tesla is in a great situation to take a big piece of that market, and it will be very hard for other companies to compete with them. Before I talk about the latest news that you might have missed, it's important to remember that dollar cost averaging into Tesla is one of my favorite ways to trade. Even if the price of the stock goes down by 5 or 10%, I'll still buy more shares. This is because, despite what you may have read or heard in the news, I still think Tesla has a lot of room for growth and new ideas. I'm shocked to say that demand is still going strong. Many people who didn't agree with Elon thought that making him CEO of Twitter would hurt Tesla's image. They should feel more confident now that they've heard what Elon had to say, though. From investors, the question they ask us most often is about demand. I want to put your mind at ease by telling you that so far in January, we've seen more orders than at any other time this year, Elon said. At Tesla, our goal has always been to make cars that as many people as possible can afford. I'm glad we're able to do that. I believe that many people want to buy a Tesla but can't afford one. For this reason, the price changes are important for most people. I think Tesla will keep setting new sales records even though the auto business is shrinking. Tasha also said, listen to this, if you don't believe me, I think it's a good thing. After all, it's also going really well with keeping costs down. In Berlin and Austin, the cost of production is going down at the same rate as output. Anyway, Tesla will keep breaking records over and over again. I know it sounds crazy to say that Tesla could double in value in the next year, but hear me out. I still plan to buy Tesla stock whenever I can, little by little, even if it doesn't happen in the next year. Also, Cathie Wood thinks Tesla will reach a crazy high price in the next 5 to 10 years, and she has been buying the dip many times. I can see that Tesla needs to make more money and cut down on production costs if it wants to reach its high price goals. I think the company is on the right track to do both of these things. I also think that many standard automakers are racing to catch up to Tesla because they didn't believe it could meet market demand at first. To sum up, Tasha talked about Tesla, its latest news, and its future plans. She thinks that electric cars are the way of the future and that standard automakers are in trouble because most of their cars run on gas. Tasha talks about two big events that could double the price of Tesla stock, the company's insurance business growing, and a new, cheaper Tesla that costs $25,000. Tesla insurance is already available in a few states, but the company wants to offer it in 45 states by the end of 2023. This could give Tesla a big piece of the $300 billion US car insurance market. She thinks that dollar cost averaging is a good way to invest in Tesla stock because she sees room for growth and new ideas. She also says that Elon Musk has reported a lot of good orders so far in January, even though there are some worries about demand. Tasha thinks that Tesla will keep setting sales records and that the company is on the right track to make more money and lower the cost of making cars. Before we go, I'd like to talk about a unique benefit of Tesla insurance that most investors don't know about. Tesla has changed the way car insurance works, and this new way of doing things could really pay off for the company. For instance, fixing Tesla electric cars costs a lot. which is why the automaker and insurance companies have taken different methods. Elon Musk, the CEO of Tesla, is working to lower repair costs and insurance rates by making Tesla cars better in terms of design and software. On the other hand, insurance companies are writing off Tesla Model Ys with low mileage that are involved in crashes and selling them at salvage auctions because they are too expensive to fix. During Tesla's Q4 earnings call on Wednesday, Elon Musk said that third-party insurance premiums were too high and that Tesla's insurance section was lowering rates for Tesla owners to fix the problem. Musk also said that the company's goal is to make it cheaper to fix a Tesla after an accident by making changes to the design and software. It's remarkable how small changes in the design of the bumper and providing spare parts needed for collision repair have an enormous effect on the repair cost, he said. Most accidents are actually small, like a broken fender or a scratched side of the car. Reuters did some research and found out new details about what happens to Teslas with low mileage that are involved in crashes. The two biggest U.S. salvage auction houses, Copart and IAA, say that most of the over 120 Model Ys that were deemed total losses after accidents and put up for auction in December and January had less than 10,000 miles on them. These cars cost anywhere from $60,000 to over $80,000 at retail. As part of their auction descriptions, the cars were listed with the type of accident they were in and generally include photos of the damage after the accident. When the cost of fixes is too high, insurance companies usually write off a car as a total loss and pay the owner. Some insurance companies like State Farm, Geico, Progressive, and Farmers bought back the cars that were in accidents and put them up for auction. These companies are mentioned in the Copart listings. Berkshire Hathaway, which is owned by Warren Buffett, owns Geico. During the earnings call on Wednesday, Tesla CFO Zachary Kirkhorn said that the company's insurance had brought in $300 million in fees every year, which is a 20% increase from the previous quarter. This growth rate was faster than Tesla's business for making cars. In the study, Reuters looked at only 2022 or 2023 Model Ys that were made at either the Fremont plant in California or the Austin plant in Texas. All but one of the 15 Model Y long-range cars that were built in Austin from June to November and were deemed total losses after crashes had less than 10,000 miles on them. A front collision 2022 Model Y long range made in Austin and put on the IAA's list in early January cost $61,388 to buy and was expected to cost $50,388 to fix. No information was given about who owned the car. Another Austin-built Model Y that was in a side collision and was mentioned by IAA had a list price of $72,667 and an estimated cost of $43,814 to fix. That's all I have to say about it for this film. Again, sign up for Wall Street Games right now if you haven't already. Hit the like button, and I'll see you in the next film.